Hi, everybody. Welcome in. We'll give people a couple minutes to join, and then we'll go ahead and kick this thing off. I like the mug there, Steve. Very nice.
Oh, for whatever reason, it blinked it out. Starbucks.
I have my Deltek koozie on my seltzer
Very nice.
here.
All
All right, welcome in, folks. So let's go ahead and we're going to kick this thing off. So, welcome to Mastering Costpoint Year-End Close. So, I'm Colin Quinn. I'll be your host this afternoon. Steve Fruitman's also on the line today. He's a founding partner here at Kinetek, an integral part of our consulting team. He'll be sharing his awesome end-of-year knowledge with you guys today. So, stick around and get those questions ready. Before Steve kicks this thing off, a little bit about Kinetek. So we were founded in 2002 by former Deltek consultants. We bring over 2 decades of experience to the consulting realm, dating all the way back to System One, not to date ourselves, been around for a while. So as both a Deltek Premier partner and an IBM Cognos partner, we excel at not only integrating your data, but also extracting and reporting on that critical information from your cost point system. So this distinct value add sets us apart and enhances our already robust service offerings. So a little bit about our expertise here. We offer unparalleled cost point implementation design services, whether it's a brand new implementation, cost point upgrade, add-on module, ongoing support and training, we've got all your needs covered. Our subject matter experts have firsthand and real-world experience with Deltek Costpoint and can configure your system to maximize your standard business operations and meet your company's most complex contract requirements. So why choose us, right? We're a dynamic consulting firm equipped with a diverse knowledge base and expertise that effectively bridges the gap between users and technology solutions like Costpoint. We're committed to empowering businesses just like yours. And without further ado, Steve, I'll throw it over to you and let you kick off this session.
right, thank you, Colin. We're going to be talking about fiscal year and calendar year end and all the preparations that go into it. There's a lot of topics here to go through, so I certainly hope we make it within the time we have allotted. At the end of this, we also have questions and answer session, for this. And let's just go ahead and get a start. So the first slide here is the roadmap to year-end success. We'll be talking about available resources. We have a comprehensive checklist, really more for the period end. Complications that arise with your use of Costpoint and as you try to wrap up the year. Of course, posting all the data and reconciliations, utilities that are to be ran, final updates, closing process, closing the period, and at the very end, a Q&A session. So moving ahead to what is a year-end close, it's really timing is a key, and that's a lot of what we're going to be talking about is the various efforts that you have to do. Timing, we are trying to take all the financial project material information, wrap it up, close it, get the final numbers, and have them available in various parts of the system. The financials, the GL close, the projects is the update of the project history. There are material considerations, and even something as simple as ordering forms. Again, we're going to be going through a number of those. Before we get started in the details, you're not alone out there. So is there, if you're in the ocean and you're a great swimmer, not a problem, as long as there's not like sharks or something like that coming after you. But sometimes you need a one of those life rings or lifesavers, that they throw out. Hopefully it's not the candy, but it's the one that floats with a rope on it. But the year-end resources, knowledge base, KB is knowledge base article 115056 is a good one. I put it out there just because, look, if you can go out and find this information, that's great. If you have the ability to get to knowledge base. If not, just let us know. We'll be more than happy to send it to you. The Costpoint 8.2x year-end guide, even if you're not using 8.2 or if you're on 25.3, 2025.3, or if you're on one of the version 7s or a earlier version 8, this guide is not specific to exactly 8.2. It's just a very good guide to do it. Basically, everything in this presentation is somewhere represented in that guide. It's really one of the first times I've seen this comprehensive of a guide from Deltek. Again, if you need a copy of it, we're more than happy to email it. The actual link is right there from Deltek. So that's the Deltek link. And again, if you need it, we'll be more than happy to send it. If you don't have access to that part of the site, not everybody in your company may have access to that part of the Deltek portal. The Deltek Learning Zone also has year-end resources. And of course, us, Kinetek, we're more than happy to provide whether documents or support. Generally speaking, with some of our closer clients, we will work with them. You'll take like an hour or two just to go through the close process. And that's just, just kind of an assurance that everything is covered. So we're going to try to go through that in the next, 30 to 45 minutes here. So we'll see where we land. As far as the year-end overview goes, we're going to be talking first about preparations. And there's quite a bit of preparation before you actually get into the year-end. The next set of steps will be the actual updating within the system, what is recommended within the calendar and fiscal year updates. And then comes the updating of the project prior year history, which is a part of the fiscal, and the updating of the general ledger beginning balances, which is kind of the end of the process, that and the reconciliations to make sure that it's all correct. You may have seen this in prior webinars. This is the month-end checklist. You see that we got a big thing right smack in the middle. This isn't because we're talking about the month-end checklist. It's another resource in order to get through your month. In order for you to do year-end, your month ends all have to be closed. This is a good checklist. If you want a copy again, just send us an email. We'll be more than happy to do that. That's all we're going to talk on the checklist. So in that preparation, various items of the system that need to be considered for year-end close. From the very simplest, you got to have your next period, sub-period available, especially if you've got reversing accrual entries. They're going to, if you booked them in period 12 and they're going to reverse in period 1 of the next year, that period, sub-period need to be available in order to do as simple as that. Pool rates, target provisional cost of money if charged. We'll talk more about the necessity in the materials slide, but that is a very key component for those of you that are material users, especially if you apply burden onto the piece part material in inventory. This is a very key component that needs to be considered. Period exchange rates for those that do foreign currencies, to get your period exchange rates set up and ready for the next year. The entering and posting of the period end accruals is key, obviously, for your final financials. Statistical and unit values for service centers. That's for if you've got a service center and it's a base that's not a dollars base, then a statistical value or a unit value needs to be updated as you go into your next year. So if you're copying your pools and you have service centers also in the next year, you got to remember to update the bases of those service centers. So the next two are kind of manual adjustments that occur on the project side. So revenue adjustments and schedule billings. So those of you that have firm fixed price billings, if you're using schedule, you may need to update your schedule bill or revenue adjustments as you get into the next year. Any project modification, because that's going to control ceilings, you want to make sure those are all up to date. And the next bullet is the ceilings, which is talking about that. Sorry, I got to take a breath here. T&M billing rates, because you can fix those to dates. Just make sure that as you go into the next year that your dates are valid for the T&M billing rates. Bank information for the next year as well, if you're doing bank reconciliations. And that very last bullet, maybe I didn't write it exactly so clearly. The concept there is, as you're in that final period, in period 12 or 13, whatever you call the final period of the year, and as you open up the period 1 of the next year and AP, purchasing, materials, time charging is all in that period 1, you need to inactivate all of those functions, maybe except journal entry processing in period 12 so that you don't get unexpected postings into the previous period. That's just good month to month, period close process, but it's just a reminder at year end that if you've got problems with that during the year, you will have problems with that at year end as well. So that last bullet is definitely something you want to watch and control. So utilities that are to be ran, the utilities are all listed here. We're not going to talk about all of them. So let's talk about a couple of them. But if you request this presentation, then you'll have all these utilities obviously there. If you've attended like our month end, again, we go through the same utilities, but that very first one, updating the financial statement summary, your financials come off the FS sum table in Costpoint, not the GL post sum. So you got to make sure your FS sum, it's just something that every period you should be checking this to make sure that nothing's there, or to sync it if you do get a result. Certainly at year end, because you are going to go through reconciliation, it needs to be in sync and updated. It's very rare that something ever does pop up, but if it does, your financials will not be in agreement with your general ledger. Rather than waste time, it's an easy solution. Just run that utility. Assigning the function codes and checking for function code equals 0 kind of go hand in hand with each other. Best just to run the assigned function codes, because that'll come into play during the project history updates, is where that will get you. Compare project ledger, general ledger. The key component there is, did you run compute burden? And that'll tell you all the periods that you didn't run it and that you need to do. So all of the rest of the utilities are here for your reference if you so choose, if you take a screenshot or if you want a copy of this presentation. Again, they all should be ran. They're all key, very important, and they will all affect your data integrity as you get to the reconciliations. Of course, with reconciliation, before you begin, we want you to be reconciled. So trial balance, you want to make sure that, balance sheet is balanced, that the balance sheet makes sense, that, that you've done your reconciliations and within the trial balance as well. So those are very key. On the project side, the project cost can be best looked at by the PSR if you run it by an owning org level 1, and you'd be reconciling that back to your financials as an example. Project revenue, you could use the same PSR at org level 1 or revenue summary, revenue summary by project. And you don't want to close your year out without addressing unbilled AR. So hopefully you're looking at this by period, and it's not all coming at the very end of the year, but unbilled AR is, we always like to say, it's the final truth within Costpoint. If your unbilled AR is in balance, your project side of the system is probably in pretty good shape. Retained earnings and retained earning handling is, you don't really deal with it during the year that much. At the end of the year, it becomes a very important component. So during the year, your current year retained earnings, and hopefully you can see, let me see if I can get my little pointer. Oops, sorry, forget the pointer, but you can see this right here is the current year period close. So during the year, it's going to go to your current year retained earnings. So the balance of your P&L will end up in whatever financial statement line is there. So that's how Costpoint knows current year retained earnings during the year. It's an applied. There is no journal entry that occurs. So when you look at the current, if you have a current year retained earning account, there's not going to be any posting, because it's an applied value from the P&L onto the balance sheet onto this financial statement line. You don't want any accounts mapping into this financial statement line. You only want it for the P&L to be there, right? So again, if you have a mix of other accounts coming in here, you're going to have to then reconcile that. You have to take those out in order to reconcile. Really, the best business practice is have this be its own item on that line. Now, on your prior year retained earnings, this is what ends up during year-end close. So when we do the update general ledger beginning balances, all your P&L accounts are going to close out to this account right here, not what you see over on the right side, but what's on the left, okay? And then when we look at the reconciliation template towards the end of this presentation, we'll see more about this. But again, it's in the general ledger settings is where this is all determined, and hopefully this screen is big enough for you to see. All the stuff up here is just giving you more detail about what I just went through. A complication that we run into during year end is anybody that has more than one Costpoint company. Costpoint gives you the ability to have multiple companies, and you can see in our example, we have company 1 and company 2. It doesn't really matter what company 2 means. It's just the fact that you've got a company 2, or you may have 12 companies and you may have 20 companies. The Good part is it has its purpose. The bad part is any closing step that you do in one company, you're going to have to do in all of the other companies. So if you've got, I don't know how many items were on that other list that I showed, but let's just say it's about 60. You got about 60 items on that list. You're going to have to run it 60 in each company. So if you got 2 companies, it's 120. If you've got 5 companies, it's 300, right? So, you know, you can kind of go from there. So, just keep that in mind that if you've got multiple companies, you're going to have to run it multiple times. The next one is about lead time, and that's forms at the year end. So if you're going to have pre-printed 1099 forms, you need to order it. In the gray box is the Deltek site and the partners that they work with for 1099 W-2s. If you're a payroll user and you're going to be producing W-2 forms out of Costpoint, you can print on blank paper, but copy A needs to be on a pre-printed red ink form. All the information is here again for that. I would strongly recommend, if that is where your situation is, that you need forms. Forms do have a lead time. You should expect at least a month of time unless you expedite the sending, but you need to run tests. And what if you have to reorder the form if you get the wrong one? Sometimes the vendor just sends the wrong form. It's just accidents happen. Just be prepared. We're towards the end of October. So you've got the month of November and most of December to deal with that. So you do have time, but don't wait too long. Don't wait until December because everybody else can be ordering those forms and you may not have time to get a reorder without expediting. That could be a costly form at that point. Updates for the year end. So the very first thing that you see on there is confirming the year-end updates. The year-end updates are sent by Deltek. You need to make sure that they are installed, especially if you're going to do 1099s and W-2s. On the 1099s, which is under the vendor section there, you need to make sure that the checkbox on the vendor has print 1099 form checked and that you have the 1099 tax data associated with that. There's also a new field that Deltek has provided in 8.2, which is a default state field. And so that may, of course, be of use. For payroll and W-2s, there's quite a bit. There's items on this slide and on the next slide that are very specific to W-2s. Again, if you're doing payroll through Costpoint and you're doing W-2s, you may want to take note here. Also, you may want to just literally get that 8.2 guide as well, because that'll show the same things, but it'll give a little bit more specificity, if that's a word. Well, it is now. You get the idea. More specifics on that issue. And like I said, this is just more of the payroll continued of the various items within the W-2. Okay, now we roll into what are the 2 processes of the year-end close. You have a calendar and a fiscal year. So on the right side of that, the fiscal year, it's really updating the project history and the general ledger beginning balances. So that makes up what we call the fiscal year-end close. The calendar has items in it that are kind of both period or calendar and fiscal year, just because we kind of keep what we call the fiscal clean to just those 2 major functions. But the other side, the left side, does address those. And of course, closing the subledger modules and the creation of the 1099 and the W-2s, right? Those are definitely the key processes. We're going to talk about the calendar processes first, and that's kind of in this little workflow. You can see where we're heading here. Other times, if you're like in church and you're trying to scroll ahead to see or move ahead to see, okay, how far do we have in the Bible? That's kind of what we're doing here. So you can see we're at box 2 of 4. So once we get to box 4, we're pretty much at the end. So the key points for the calendar year end. The first one is all of the periods and subperiods. So making sure that your periods and subperiods are set up for the next fiscal year. Timesheet periods are set up for the timesheets, leave periods for your leave, payroll periods for payroll, depreciation periods for fixed assets. All these need to be addressed within each of the submodules. So you really don't want to go into the new year without those already being addressed. Copying pools into the next fiscal year. So bullet 2 and bullet 3 kind of go hand in hand. So copy those those pools into the next fiscal year, do it ahead of the next fiscal year, especially for material purposes. Financial purposes, you really do have kind of almost a month, but if you want burdens on your PSRs, you need to have those pools in there really as close to the beginning as possible so that you have relevant PSRs in the next fiscal year. For those of you that are material users, again, updating the pool rates, specifically the target in that next fiscal year early on so that there is a rate that's available. Provisionals for your billing. So if you're going to bill within that first week or 2 weeks, again, need to make sure those provisional and target rates are already in those pools that were just copied over. The statistical and units, we talked about that a couple slides ago. So for those of you that have service centers that are considered a automatic service center, but they don't use a dollar or an hour, then you could use a statistical, which is a GL account value, or a unit that you upload every period. Either way, that's going to determine the base of your service center for the next year. So if you're creating pools and you have service centers with these types of bases, you need to get a base in there so you have a relevant service center allocation as you move into that next year. Okay, so from here, now we get into cloning project burden ceilings and fee overrides, because they do carry fiscal year definitions, potentially, if you use it that way. Burden fee override, which is the next one over here. Same thing, that has fiscal year. And then we have our sub-ledgers: close the inventory fiscal year, close the leave fiscal year, close the payroll year, close the fixed asset year, right? So those are our various sub-ledgers that need to go through various closings before we can do our year-end, or before you should do your year-end. Continuing on, the generic billing format has a fiscal year. Generally speaking, when I set up generic billing formats, I try not to put the fiscal year in there, but it is possible. If you have generic billing formats, you may want to check and make sure that there's no fiscal year reference. If there is, you'll need to build it for the next fiscal year. Project budgets have fiscal year references as well, general ledger budgets, PLC billing rates, because you could have your rates that are defined by a time frame, a fiscal year period. So if you do, you need to make sure that if you've got rates that are expiring at the end of the fiscal year, that you've got rates that are valid for the next fiscal year. Both the journal entry cycles and the recurring AP voucher cycles, if you have recurring codes in either of those two, you need to make sure that the periods are set up for the next year in that recurring cycle setup for those two. And we end the calendar with the 1099 processing and the W-2 processing. Very obviously, if you're a company that's doing either of those two, you need to make sure, as we said before, with the preparation, both for the 1099 and the W-2, that you've done all that ahead of actually running these processes. So the next one is getting very specific into materials. And we get calls on this. In fact, I was just on one yesterday, and Colin and I just, we get this often. We try to warn clients as we get into the end of this coming fiscal year of this particular situation. If you burden inventory, where each piece of inventory is burdened, it doesn't mean that it's not part of the pool, right? That's sort of a separate component, the GL and the projects. But if you burden inventory and your stock status shows a burden on the piece of material, then you need to copy the pools for that fiscal year before that fiscal year begins. So those pools have to be copied in before the new year starts. Those pools have to have a rate of some sort, a target rate or an actual, preferably target, at this point in the year. You could have an actual rate, but you may not have enough actuals to compute one. So you may need to enter like last year's ending actual rate as a for instance, but it's better just to go with target. That's a cleaner route to go. But you need a rate so that the individual pieces of material and inventory have a burden. And when you relieve a MO, that relieved MO has a burden value on the value of the costed MO. That is very important. The next two steps, which is build rate application, compute inventory burden, that's taking that pool and it's deriving the application in the background for the way Costpoint needs to have the applications occur And then the compute inventory burden is what actually places it out for the inventory module and the MOs to use that burden value. Stock status, specifically raw material and finished goods. This is such a time-sensitive item. I can't even tell you how many databases we've had to restore in order to get these numbers at a specific point in time. You cannot miss the printing of these particular reports. These have to be very date sensitive. So whatever your end of the year is, so if you end on say 12/28, not 12/31, but 12/28 is the end of your year, you've got to pick these reports up on 12/28. If it's 12/31, then there's got to be someone that's maybe holding off on their champagne for New Year's on 12/31 or 1/1, but grabbing these reports and at the same time grabbing the trial balance that's at that point. It's not to say that the trial balance can't be reprinted for the period. It's just you may have additional postings that may have changed the numbers that day or the next day. It all has to be at this point in time. So these are very important components to capture at that moment, okay? Both stock status and the trial balance at that moment. Take it, save it off, make sure you have it. It'll make it for reconciliation a lot better in Excel. So if assuming that your system is not going to exceed the size of Excel, a good number of Costpoint users, especially with stock status, very likely may exceed the size of Excel. And if that's the case, there's two options. There's Excel 2010 and Excel, the options right above that just says Excel. That actually goes to XML, and that doesn't have the same limits that 2010 does. 2010 has limits. You can get those limits increased by your DBA, but generally speaking, it's like 10,000 rows is kind of the common limit. Maybe you get it to 50, Excel will hold up to 1,000,000 rows. So you technically could get it up to 1,000,000, but your DBAs may not do that for you. So if you go with the first option, which is XML, that generally doesn't have that particular limit. If nothing else, at least get it to PDF, just make sure you have it. Cost and MO report, again, another one of these that is very time sensitive. It has to be at that moment. A lot of the MO can be backed into by period, like the labor component and a lot of the issue and transfer transactions. But if you want to use the cost and MO report, the header of that is dynamic, just like the rest of the material system. It's date driven. So whatever happens the very next day on 1/1, 1/2, 1/3, that header is going to keep changing. So your ability to get what the header of the cost and MO report is at any point in time is very date sensitive. So that has to be. And on the print PO commitment report real time, this one is, there are dependencies. So you want to make sure certain postings have been completed. And I would just say on this one, you just need to be sensitive to what is your process to make sure that the commitments are captured at the right moment, okay? So as I said, as we turn the pages in our book here, we now go to the update project prior year history, kind of a mouthful there. We're at the third block of our 4 blocks that we go through. This is the big one, right? So this is the one that's moving all your data from current year project to prior year project history. And what we want you to do is to capture your project reports before you do it. You do have forgiveness in the sense that you could always come back. If you didn't do it, you can rerun them after the fact, but it's just better just to capture them before you start. So in the year that you're closing, you want to capture in hopefully the 2010 format, but if it doesn't fit the 2010, you may have to go with the Excel and then convert from the XML into Excel itself. But you want to capture that data. We recommend that you do it at a very high level. You could do it at level 1 project, whatever suits your needs, but generally we'll do it at owning org. So at a very high level, so we can fit it into Excel. And you want to save the parameters because you want to run this exact report after you run this process so that you could do a reconciliation. Again, best if it's done in Excel, not with PDFs. If you want to run PDF, no harm, no foul. But if it's in Excel, then it's a lot easier to work with the data between the before and the after you've done your roll forward. The labor summary has a little bit of a gotcha in the sense that you have period, year to date, and contract to date, but you do not have a prior year. No idea as to why that is the case, but you just don't. So you have to derive prior year, but you definitely want to capture that. And then the revenue summary, is just another good report to do. Every now and then, the PSR and the revenue summary may not be in balance with one another. There are reasons, and it has to do with accounts being in the PAG. Oddly, the PSR will not count it, but the revenue summary will count it. It's kind of an odd thing within Costpoint that that's the case. But when those two reports don't equal, that generally means there's probably a PAG problem. And unfortunately, it could be a PAG problem from not this year, it could be from 4 years ago, right? So it may be a deeper issue than you can really fix with the current year data. The actual process of running the project history update is the screen that you see here. For whatever reason, unlike the GL side, which is logically in the beginning balance, this is under the project utilities, project cost utilities, this particular one. So update prior year history. The prior history will take your current data that's year to date for the current year being closed, and it's basically going to update project history with the current year data. So there's a couple things that you have to be careful of, especially if you've already if this is your first year in Costpoint and you're uploading data. You got to be very careful that you don't overwrite the data that you had uploaded in your first year of Costpoint use. So generally speaking, after you're done with your first year of Costpoint, you're into your second and third. That's less of a risk, but it will update the data. So you do have to be cognizant that that's the case. The other thing is that year right there, the 2025 that you see in the screen, the year doesn't say what year you're updating to, which in the GL it does. So you got to be very cognizant that you've got the correct year in here. And if you've got parameters, like you can see, I've got a parameter, generally it's going to have last year's data in it. So you may have 2024. We don't want you updating 2024 data. We want you updating 2025 for the prior year 2026. You got to be very cognizant of what's actually in there. As far as the updates here, if you have units or billing value, check those. But the key ones are project ledger and labor history. These are the big ones that you want to make sure. And these are the ones that we're going to talk about. If these are also used within your system, you want to include them. I'm not saying you shouldn't. It's just in our example, we don't have it. You have this selection of whether you want to go actual or target or actual cost target revenue, kind of a hybrid. Whatever you choose here, you want it to be consistent with when we close the GL balances, you do have to say what year you closed it with. So what you see here, actual or target, should be consistent with what we do on the general ledger side. Okay. And when we do the general ledger, we have the same statement, but going back the other way. And down on the lower right here, these are new options in the 8 series of copying project setup data to history and then overwriting existing data. This is to your benefit, right? This is creating an audit record of that data. Be cognizant of this clear data because that'll clear out some of this information. Costpoint's got some interesting calculations if you do need to go back into a prior year of how it uses the saved data. So again, you do have to be cognizant of what it was, but Deltek's going to copy everything that was from a project setup. So your mods and your revenue and your billing formula. So all that information is going to get copied for that fiscal year. So again, it's to your benefit to have that. And then some information about adjustment period, if you happen to use those, that's indicated there as well. Okay, so after we've done the update, so that last screen is as if we've done the update, we're going to reprint the same reports that we printed before, but we're going to now do it after, right? And the after printing, we're going to print the PSR, labor summary, and revenue summary by owning org in all cases. We're using the same parameters that we used on the before report, so the report should line up, and then we're going to go through a reconciliation. So down at the bottom here, and I probably should have done those highlighting so you could see, but as you look at this right here, the PSR, you're comparing the contract to date of the fiscal year being closed to the prior year actuals of the next fiscal year PSR, right? So you're making sure that the contract to date of the year being closed equals the prior year of the next year. What that would indicate is that your project history was updated correctly and accurately. If you have differences, something occurred that didn't work correctly. A lot of times you're going to find that in either the function codes with an account that was changed or removed from a PAG, and you have a function code of 0 on the table. Those will not show up in PSRs, but oddly, they will show up in the revenue summary. So that could be one reason that you don't have a reconciliation, okay? Other reasons could be in the pools, and where you may have pulled accounts out of a pool base but didn't appropriately update your pool base. We call it the gift that keeps on giving, because it will pop right back up during year end and you have to correct it. Generally speaking, you have to go back to the sub period that was the cause of that for the pools, which may take you all the way back to period 1 for a project. So give yourself time in case these types of situations do arise, so that you have time to address them. Labor summary gets a little dicey because there is not a prior year. So what you have to take is the inception to date minus the year to date in the next year. Subtract that, that gives you the prior year. And then you could compare your prior year to the contract to date of the year being closed, right? So that one takes a little bit of math, not that difficult, but you just have to be cognizant that the labor summary is going to be a little bit different. And revenue summary, very similar, but more consolidated in its approach. But it does point out other issues, especially if you're going to compare it back to the PSR, if there are differences between the two. They should be equal to one another, but you got to be cognizant that there could be differences and what would cause that. And hopefully you will then review this presentation, which will be on the Kinetek site on YouTube, and by the way, on TikTok. For those of you that are allowed to see TikTok, but who knows, now that that company's going through a change, maybe we'll all be able to enjoy TikToks from work or whatever, but and see all those Kinetek videos that are out there. But anyway, yeah, this will be out there and you'll be able to review and remind yourself as to what I just said on that. That fourth block, we are right towards the end of this, right? So updating the general ledger beginning balances. So this right here is moving the GL beginning balances into beginning balances and closing out to retained earnings. But before we begin, just like with project, we need the reports before. Unlike the projects, which is forgiving, like if you didn't print the report, you could easily reprint it. This one here is where that blue arrow is, where we need a balance sheet of the first period of the next year before you do the roll. So we need to know what the balances are in the balance sheet before that. Once we roll the balances, that's it. You cannot recreate this anymore with that data, because the balances will have rolled in, and you'll only be able to do a trial balance reconciliation at that point. You won't be able to do a balance sheet balance. Or if you do a balance sheet, you're going to have to do a fair amount of math. And sometimes when companies do more than one roll forward, like for audit updates, then we do have to do more math on the balance sheet in order to get that. Also, we need the income statement printed because we need to know P&L. But again, it's forgiving. You could reprint it if for whatever reason you missed it. Regardless of how you do it, we want you to do it to Excel 2010 so it's comparable, and save the parameter so that you can run it the exact same way after you've done the roll. Remember, use the same parameter every time. Don't print one report with one parameter, another report with another, and then spend a lot of time trying to get them to line up. It's just to have those parameters be consistent between the two. The actual effort of updating the GL beginning balances is found within the beginning balance menu on the general ledger module. And the update of the GL beginning balance, as you can see, there's not a whole lot, but when you put in the fiscal year 2025, it actually tells you in this one, you're updating 2026. So that's kind of cool. In the project side, remember I said you don't have that. So you got to be very cognizant of what year you put here. Here, it's a little bit more obvious that 2025 is going into 2026. Generally speaking, we recommend not to print subtotals. For most companies, it's just not going to matter. But for those that are larger companies, this will tie up your server and take a horrendous amount of time in order to do that. Whether you want to see change balances or all balances is really just more of a preference. Setting the fiscal year status to closed is at the very end. That's just a good habit if you're ready to put it to closed. And then the closing rate type. This will not choose how you closed your projects. You do that in the project update of project history. Remember, I said you have to choose actual target or actual for cost target for revenue. but you got to be consistent with what you do in this screen here. So if we closed one at actual, we want to mark it actual. We don't want to close it actual on one side and mark it as target here because it won't be consistent. Income statement will close to retained earnings. We'll get a little bit more into that. The balance sheet will go to the GL post sum as period 0 with no GL detail to back it up. So when you look at period 0 entries in GL post sum, there's no GL detail record that goes with it. And only those accounts that are balance sheet accounts will go into the beginning balances or period 0. Now, what accounts are there and how does Costpoint know? Costpoint has 6 account types, right? And these are the 6 account types right over here. And how Deltek knows this, or Costpoint knows this, is the balance sheet is 3: asset, liability, and equity. And that's what this is showing here. Those 3 will roll into beginning balances of period 0 GL post sum. Okay, pretty cut and dry. The P&L, which is these right here: labor expense, non-labor expense, and income. So of the 6, there's 3 are balance sheet, 3 are income statement. These 3 will go into retained earnings. They'll roll into your prior year retained earning value. Remember, we saw that in the GL settings where you said, okay, current year goes into 1, prior year goes into a GL account. All of these are going to go into that prior year GL account. Then when we're all done, you print your reports after, and again, your balance sheet, your income statement, and then you get into this really cool reconciliation template. And if you want a copy of this template, we could send you one without all these wonderful numbers in it. It's and what the formulas in it. It's pretty simple, but it's very good for organizing how you're going to tie this out. And what this is doing is it's comparing the year being closed with that next fiscal year balance sheet before you started, which you see with the orange shading right on the top here, this column. And we'll just sort of just go right into this. So the current plus the next year before the roll forward is going to equal this calculated value. That calculated value should equal your 2026 balance sheet, which again is where this purple arrow is pointing to, right? That's your 2026 balance sheet. Hopefully it's a perfect situation, no differences here, right? Your balance sheet may look different than this. This is kind of a simple basic balance sheet that we typically would see. But you could update it with what's more pertinent to your balance sheet in order to make this more relevant for you. Now, additionally is an equity. And for whatever reason, the equity tie-out just gets complicated with a lot of companies. Even in the most straightforward, simple manner, it just gets difficult. I can't exactly answer why it is. Sometimes it's understanding the math. Sometimes it's understanding the dynamics of cost point. So your income loss, so the bottom line number from the P&L, this value right here, which is what we're entering here, we compare that against the current year income on the balance sheet. Remember in GL settings, we said we have that current year financial statement line, right? That's what we're showing here. These two numbers have to be the same, right? And that's what you see the difference there is. If you have a difference, possibly you have other accounts that are mapped into the current year retained earning line. Our recommendation is keep this thing very vanilla, keep it only for the P&L to apply against. If you have other reasons, create a different financial statement line so you can manage it separate, but keep these as clean as possible so you can do this comparison. If you don't do this comparison, then you're going to have to do additional reconciliation to get those other accounts out of this balance. And it just makes it, substantially more complicated to do this. Now, the next step is once you've done that, and after you've done your roll forward, your current year retained earnings plus your prior year retained earnings from the year being closed should equal the prior year retained earnings in the next year. So in 2025, it will look like this. You have a current and a prior that are going to be in separate financial statement lines. Hopefully that's the case and nice and clean. In the next fiscal year, because this is closed out, this current year is closed out to prior. So all of that balance is going to sit in the prior year only. There is no current year. The current year is going to be the current year P&L, which you see here is going against that. Why is it negative? Probably because you've got a bunch of accrual reversals that haven't rebooked yet, right? So you got, temporarily reversals or decrease in revenue, from the next year. Generally speaking, that's kind of the cause of why you get these funny looking numbers. So that really kind of brings you to the end, right? So remember when I was talking about, like, if you're looking through your hymnal, you kind of hit like the end of the hymnal, but guess what? That's not the end. Because in the marketing, by the way, Colin put out all that marketing. In the marketing, we talked about a new feature in 8.2, which is called the Closing Manager. And quite honestly, it's new for us too, right? It's brand new. It's really quite cool. Deltek has done a phenomenal job to bring this out. They're going to grow it and develop it more. So you're going to see a lot about this. Anybody that's at ProjectCon, by the way, we're going to be at ProjectCon. Love to meet every one of you. So feel free to drop by our booth and get some of our items that we're going to have at ProjectCon. But they're going to be probably talking about this. This is definitely something that's going to get a lot of exposure. The relevance for this topic here is you could set this up for both all your steps in your month end, as well as for your year end, for your calendar and your fiscal year. And as you can see in this is by the way, this is the new Costpoint screen. If you have not seen 8.2, 2025.3 and forward, this is called Harmony. And for everyone that's hosted, this is already an option for most of you. For those of you that are on-prem, it's a choice that you get to make. Long-term, Deltek is going to move everybody. There won't be an option long-term. So whether you start getting used to it now or a month from now or a quarter from now or half a year, you do need to start looking at this. And what I was told at ProjectCon, they're asking everybody, including us, to have all of our presentations in Harmony. So you're going to start seeing, instead of the blue background, you're going to see the white background. And that's just, again, just going to be common for that. But in this new feature, what you have is you have the ability to put in your checklist or your steps. And I'll bring up the actual cost point here in a second. You can put the start, the end date, whether it's completed as status dependency, and hidden way over to the right there is the assigned, right? Who's actually assigned. Actually, let's take a look in cost point. Sorry, we had a slide that was addressing just that. This is what it looks like in cost point. And you can see again that there's quite a bit of.
Hold on, Steve, you're not sharing. You're still sharing your presentation.
I'm sorry. Thank you, Colin, for pointing that out. We'll just put this right on top, not exactly the most pretty, but let me at least, this is there. All right, so again, you can see start and end, you've got various statuses, in process, waiting, completed, not started, none, right? So you've got that dependencies, treating it like Microsoft project to some degree. So, step 2 is a dependency on this one, and step 2 is calculate timesheet labor costs. By the way, this is provided by Deltek. So this is standard out of the box from Deltek, which is, again, pretty nice. There's a lot of steps here, right? So you can see they really take a lot into consideration. Who the assigned user is, and way over to the right is the application ID. And if you've got a job, like a batch job, you can put the job in. I don't believe at this point that there's actual automation quite yet, but as you can see with auto, that is the longer term desire, is to have some automation on here. But the bottom line is, if you use it as a checklist, and if you look at the very top here, fiscal year period, sub period, so you could track, period by period, where you are on your checklist. You could save each period's checklist in here, as well as the fiscal year closing checklist. So this is kind of a cool new feature. It's only available on 8.2.2025.3 and later, right? So any of those that are the Harmony version that you see here, okay? I don't know, like, you do have the option of turning off the Harmony, the new UI in 2025.3. I actually haven't looked to see if on the legacy view, if this is available. I don't believe it is, but I'll double check that if anyone does have that as a question. But you would have to be at least minimum 2025.3. Sorry, it's kind of a mouthful to say 8.2.2025.3. So let me minimize this here, and that will take us to our final here. Questions. Actually, before we get to questions, Colin, I just want to do a thank you for joining us at ProjectCon. As we mentioned, that is coming up very soon. Denver, Colorado. So bring your warm gear, your snow gear if you're going to ski. We all get to see Lindsey Vaughn, which is going to be awesome. She is just amazing skier, and I don't know if she's going to be in the Olympics. I know she's starting to compete again, but she's just amazing at 41. For those of you that like skiing, I mean, just if anyone's ever tried to even come close to anything downhill and keeping your skis parallel while going down, it is not that easy. So to see someone doing it at the speeds they do on like what's basically pure ice, it's amazing. So she will be one of the speakers. So keeping the reconciling the cost pools with general ledger, project ledger. I'm going to be doing that with a Deltek representative, Kayla Connor. So that'll be awesome. And then yours truly, Colin here, will be working with Debbie and presenting the materials mastery cradle to grave accounting playbook, which anybody that's a materials user, that's a definite must go to session. And I apologize, I got to look at my text here from Colin for upcoming webinars because we really have some really good webinars. We're going to be going on almost a monthly cycle. So we have a subcontract seminar coming up in December. We have Cognos BI tips and tricks with Chad Bishop. Anyone that's ever sat through anything with Chad, he's a phenomenal presenter. The guy's a wealth of knowledge. I am not that great on BI, but I love listening. I pick up stuff every time. Colin will be going through content management in February, so CMI. Dave Delaney will be doing some T&E topic to be announced. I know T&E is very broad. We got to narrow it down, so that will be March of 2026, and then I will be doing another topic Q2 of 2026. So let me go backwards to questions.
Sure. All right, so we got a couple here. The Q&A feature, guys, is going to be in the bottom box there. So feel free to submit your questions. If we can't get to them in the time we have left, we'll follow up with you guys offline rather. So first one we got, Steve, is where do I find the copy pool utility in cost points? You want to
Okay.
show them real quick?
You just didn't want me to speak to it, huh?
I did not know.
All right, hold
Put
on.
you on the spot.
You are, and my browser. Okay, there it is. Sorry, I was trying to find the browser. All right, so, and for those of you that have not seen Harmony, you get to see me navigate Harmony here. So this is the projects menu and cost and revenue processing, and then the menus are really the same, even in the non-Harmony. And so under the cost and revenue processing, cost pool utilities, right there's your copy pool utility. And on copy pool utility, you're from, so this is the year. So, I'm not going to run it obviously here, but, allocation group 1 and 2020, 5 to 2026, so those are my years. I'm going to copy my 25 pools to 26. And then do I want to copy my pool base data, my pool cost data, rates, and service center, right? So these are options within there. Some of the caution, if you do the base and cost data and you're one of these companies, which I hope you are, that's using pool cost and pool base creation setups, then you may not want to copy these because otherwise you have to clear out your custom base and recreate them from create pool links with active org account links for that year. You don't want to take inactive, like if you inactivate it in 2025, you may end up carrying them unintentionally forward with this utility. So keep that in mind, so it may be the gift that keeps on giving, so just kind of be cognizant. Sorry, I answered a lot more than I needed to on that question. So
That's great.
get a little
Uh,
too excited on that particular one.
we got two more to go here. So what's the difference between the update project history and general ledger history?
Okay, so that kind of takes us back slides. General ledger is the account balances. So the balance sheet accounts are going into beginning balances. The project history is updating more for your project reporting. So it's taking the current year project data and it's updating project history. So if you had not done that and you were to look at your PSR in the next year, you're not going to have the data of the prior fiscal year in the prior year information. So you're going to be missing a very large component. So you got to make sure that that project history is updated for your PSRs, your revenue calcs, and any PM type management. They're going to want to see the full data in there. For the general ledger, when you look at your balance sheet, and if you don't see the data of, again, the prior year as beginning balances, same thing, that's rolling those balances forward. They are very distinct and very different operations, and they are doing very different processes. So hopefully I answered that full enough for the person that asked that question.
That was good. Last but not least, we got one that says, not the main point of the discussion. However, is there a set of charts, or I'm assuming they mean like a PDF or something, that can be used to introduce those in my company to the new Harmony UI? Yes, is. And
Good.
if you want to shoot us an email, I can go ahead and get you a copy of that deck. I'm also going to send, for anyone, I'm sending it out now, to request any of the templates from today's webinar. Please email us at that email address. So contact@kinetek.com, and we'll go ahead and get you a copy of today's, any of the templates that you wish. That being said, we will also send out a copy of the deck to everyone who attended today. So thank you guys for checking this out. And like Steve said, stop by our booth at ProjectCon. Will be kiosk number 4. So pop in, say hello. We're always around to answer any questions you guys may have. And thanks for attending.
Thank you for attending. And do catch us on social media, both on YouTube and, if you dare, TikTok, and give us a like, because that's what makes us feel that we're putting good content out there. Thank you, Colin.
Thanks, guys. Have a good day.